Right now, there's a silent, high-stakes race happening all around us. But it's not for territory or weapons. It's for the very future of money itself. We're going to break down this global competition to redefine how value moves across our entire planet.
Just think about that for a second. Imagine no more waiting days for a bank transfer to clear. No more getting hit with those hefty fees just for sending money overseas. Just instant, seamless value, zipping across the globe just like a text message. This is the big promise, the idea that's fueling this whole revolution. Okay, that sounds pretty good, right? But the real question is, who gets to build this future? And that's where the conflict really starts. We've got two massive, competing visions emerging, each backed by some seriously powerful players, and they are absolutely on a collision course to define the next era of global finance. So, in one corner, you've got private digital cash. We're talking stablecoins, driven by tech companies and the crypto world. And in the other corner, government digital cash. These are the Central Bank Digital Currencies, or CBDCs, led by the world's most powerful financial institutions. This is the fundamental battle: private innovation versus public control. All right, let's start with the challenger that really kicked this whole thing off. The private sector's answer, the stablecoin. So what exactly is a stablecoin? You've probably heard the term. Unlike other cryptos like Bitcoin that can be super volatile, a stablecoin is designed for, well, stability. It does this by being pegged to a real-world asset, usually a major currency like the US dollar. The idea is that for every one token out there, there's $1 sitting in a reserve somewhere. It creates a stable digital equivalent of cash.
And why would you use one?
Well, they're like this crucial bridge. You get the speed and the global reach of crypto, but you don't get those wild price swings. This makes them really useful for everything from trading on crypto exchanges to blockchain lending and more for paying for actual goods and services. And when you look at the market, wow, the US dollar just completely dominates this new digital world. In fact, just $2 pegged stablecoins, Tether and USDC, make up about 90% of the entire market. Think about that. This isn't just a tech trend, it's a massive extension of the dollar's global influence. So you can probably guess what happened next. The world's central banks saw this private dollar-dominated system just exploding in growth, and they decided they needed a response. And this quote from India's Revenue Secretary, Sanjay Malhotra, perfectly captures the government's position. It's not just a suggestion, it's basically a call to action for central banks all over the world to rally behind their own solution. So what is their solution? A central bank digital currency, or CBDC. Now, this is fundamentally different from a private stablecoin. A CBDC isn't a token from a tech company that's backed by a dollar. It is a digital dollar. It's a direct liability of the central bank itself. It's official sovereign money, just in a purely digital format. The argument from officials like those at the RBI is pretty simple. Why would you settle for a private replica when you can have the real thing? Central banks believe a CBDC can offer all the technological perks of a stablecoin, but with the full faith, credit, and stability that only official government-issued money can provide.
And this whole conflict of visions, it's not just theoretical. It is creating a very real split on the world stage, and we're seeing nations starting to pick sides.
And this timeline just shows you how quickly things are moving. In the past year alone, you've got places like Hong Kong licensing stablecoin issuers to attract innovation. At the same time, the US is drafting laws to formalize their role, while India has been leading a global charge for CBDCs. The lines are being drawn in real time. For the United States, the logic here is pretty clear. Prominent figures in finance have argued that stablecoins can actually reinforce the dollar's supremacy. I mean, a world running on dollar-pegged stablecoins is a world that continues to run on the dollar. It's a way to project financial power into the 21st century and ensure the dollar stays at the center of international trade. But what looks like an opportunity for the US looks like a major threat to other nations. And this threat has a name: dollarization. Dollarization is the core fear for many nations. If a dollar-backed stablecoin becomes too popular, it could start to replace the local currency for everyday transactions. And if that happens, it erodes a nation's ability to set its own monetary policy, effectively handing over control of its economy to a foreign power, or maybe even a private tech company. And yet, even the countries that are most worried about this know they can't just build a wall. India's own Finance Minister, Nirmala Sitharaman, basically acknowledged that this transformation is happening. So the choice isn't whether to engage, but how.
Which brings us to the final, crucial question. As these two systems compete, What's really, truly at stake is control.
So here are the two distinct paths laid out. You have private stablecoins issued by tech companies pushing for innovation and borderless efficiency. Then you have public CBDCs issued by central banks focused on maintaining stability and sovereign control. And the core tension here is geopolitical. US dollar dominance on one side, national sovereignty on the other.
So at the end of the day, this really isn't just about faster payments or cool new apps. This is a fundamental debate about who gets to write the rules for the 21st century global economy. Will it be decentralized tech innovators, or will it be sovereign nations?
The race is on, and the outcome is far from certain. The decision between a world of private stablecoins and public CBDCs will shape global finance for generations. And it leaves us all with one final question to think about. Who do you trust to invent the future of money?